It is past midnight. You are lying in bed, phone in hand, scrolling through house listings like you are searching for something that actually makes sense. Every property that does not look completely falling apart is sitting at $500,000. The kitchen has countertops from a decade ago. The carpet is the color of disappointment. There is fake wood paneling in the basement nobody asked for. And the listing agent has the nerve to call it a starter home. So you are lying there, doing mental math on your salary, wondering if you missed something huge or if the entire housing market has simply lost its mind. Here is the answer. It is not you. The math is broken. And the math right now is absolutely brutal. Today we are going to do what the real estate industry desperately does not want you to do. We are going to calculate who can actually afford a $500,000 house right now. Not who the bank will approve, who can genuinely afford it without turning their entire life into a financial survival game. Because approved does not mean affordable. Those are two completely different things. Start with the reality nobody puts in the listing description. In dozens of American cities right now, $500,000 is not a luxury price. It is the starting point. That number gets you roughly 1,200 square feet, 3 bedrooms, 2 bathrooms, and a yard the size of a parking space. In cities like Denver, Austin, or anything within commuting distance of a major metro, $500,000 is what regular people are expected to somehow pay for regular houses. The national median household income sits at around $84,000 a year. So the market is asking families earning $84,000 to buy homes that cost 6 times their annual income. If that ratio makes your stomach drop, good. That means you are paying attention. And yet, everyone keeps saying it is possible. The mortgage broker says you are approved. Your parents say they bought on way less. Someone online is flipping properties with nothing down. So what is the real problem? The problem is that everyone involved is quietly lying to you about what affordable actually means. Start with the down payment, because this is where most people's dreams quietly stop. The traditional rule is 20% down on a $500,000 home. That is $100,000 cash. The median American savings account holds around $8,000. So you are not slightly behind. You are $92,000 short. And if you think you will just save your way there, the math does not help. If you earn $84,000 a year and somehow save 10% of your gross income, which almost nobody does, you are saving $8,400 per year. At that rate, you need 12 full years just to reach the down payment, and that assumes home prices stay frozen. They will not. So most people skip 20% and go with 5 or 10% down instead. Congratulations. You just unlocked a monthly penalty called private mortgage insurance. $200 to $400 every single month. And here is what makes it worse. That insurance protects the bank, not you. You are paying extra money every month to protect the lender from your own potential failure. You have not even moved in, and you are already being financially punished for not being wealthy enough. Now the actual mortgage. You put down 10%. You somehow gathered $50,000. Your loan is $450,000. At current rates between 6 and 7%, your monthly payment lands around $2,850. And this is where the dream completely falls apart, because that number covers nothing else. Add property taxes, around $500 a month being conservative. Add homeowners insurance, which has skyrocketed recently. Another $300 per month. Add maintenance, the expense everyone ignores until the water heater explodes on a Sunday night. Budget 1% of the home value annually. on a $500,000 home that is $417 every month. Then add back the private mortgage insurance, another $300. So the real monthly cost is mortgage $2,850, taxes $500, insurance $300, maintenance $417, PMI $300. Your total monthly housing bill lands at $4,367 every single month. Before anything goes wrong, financial experts say keep housing under 28% of gross income. So if $4,367 is 28% of your income, you need to earn $187,000 a year. Even using the more relaxed bank standard of 43% debt to income, you still need around $150,000 annually. And here is the part that stings. Only 10 to 20% of American households earn that much, which means 80% of families in this country cannot comfortably afford a $500,000 home under any reasonable financial standard. This is not opinion. This is just math being honest. But people are still buying. So who are they? Some have 2 professional incomes. Some received family money. And some are stretching themselves so thin that one job loss or one medical bill would collapse everything overnight. Picture 2 working professionals with a combined income of $160,000 a year, well above median, solidly upper middle class. They should be fine. After taxes, retirement contribution, and Social Security, they take home around $9,500 a month. Subtract the $4,367 in housing costs. They have $5,100 left for everything else. Now watch how fast it disappears. 2 car payments minus $800, car insurance minus $250, gas minus $300, student loans minus $600, health insurance premiums minus $400, groceries minus $800, utilities minus $450. They now have $1,500 remaining, and they have not touched clothing, kids, medical bills, car repairs, or anything that makes life feel like an actual life. Savings and emergency fund, nothing left. This household is sending 46% of their take-home pay straight to housing, not 28%. Nearly half. And these are not reckless people. They are just trying to live in a house the market decided was normal. Here is what that pressure actually feels like every day. It feels like hesitating before adding something to the grocery cart. It feels like telling your kid no to a $35 school trip because that money might be needed if the car makes a noise. It feels like waking up at 2 in the morning calculating whether new tires can wait one more month. The HVAC dies in August, and the repair is $3,500 you do not have. You finance it. Your partner's hours get cut. Now you are short every month. The emergency fund never happened because there was never anything left to save. This is what house poor actually means. You technically own a home. The bank really owns it for 30 years. You cannot afford to maintain it. You cannot afford to enjoy it. Every financial decision runs through one question first. Can we still cover the mortgage? The mortgage owns you, not the other way around. Now imagine this same situation for someone earning $100,000, or the actual national median of $84,000. At $84,000 a year, buying a $500,000 home is not ambitious. It is not a stretch goal. It is mathematically impossible without enormous outside help or a level of financial risk that should genuinely terrify anyone who looks clearly at the numbers. But the market does not care. Sellers price at $500,000 because that is what sold nearby. Banks approve at 43% debt to income because the loan will not collapse immediately. Agents encourage buyers to go as high as possible because their commission depends on the sale price. Nobody in that transaction profits from telling you the truth. The system is built to get you to the closing table, not to keep you financially alive afterward. And once you sign, leaving is not simple. Walking away destroys your credit and costs you the down payment. So people stay. They stay in homes they cannot afford, working jobs they cannot leave, watching savings disappear, wondering why they feel exhausted when they are supposedly living the dream. The honest truth is that 70 to 80% of American households cannot sustainably afford a $500,000 home. This is not about personal failure. This is not about working harder or budgeting smarter. Home prices have risen roughly 400% since 1990. Median household income grew about 180% in that same window. Those two numbers cannot meet. You cannot cut your way out of a structural affordability crisis. You cannot save a down payment when rent is already consuming 40% of your income. People are not buying homes anymore. They are buying stress. A starter home now costs expert-level money. And that is not your fault. What you can actually do is look at the numbers honestly and make a real decision. Maybe that means keeping renting and investing the difference. Maybe it means seriously looking at a home priced at $350,000 instead. Maybe it means acknowledging that homeownership in your current market is not viable right now, and that is not failure, that is clarity. There is no prize for buying a house you cannot afford. There is no trophy waiting on the other side of being house poor. The pride you feel the day you get the keys disappears fast when the payment hits every single month after that. The bank's approval is not your green light. Your emotional desire for a home is not the same thing as your ability to afford one without sacrificing everything else that matters. Real wealth is not owning a house that bleeds you monthly. It is having breathing room in your budget. It is investing consistently. It is not choosing between fixing the roof and funding your retirement. It is sleeping at night without running numbers in your head. Real wealth is freedom, not equity you cannot access because you are trapped inside the asset that is supposed to be making you rich. The entire industry profits when you buy. The lender makes 30 years of interest. The agent takes the commission. Not one of those people benefits when you walk away and say, "This does not work for me right now." So if you are sitting there feeling priced out and like you are failing at a basic life milestone, hear this clearly. You are not failing. A market that has allowed home prices to outrun wages for 30 straight years is failing you. Run the honest numbers. Include every cost. Be truthful about your income stability. And if the math says no, listen to it. The real win is making decisions based on what is actually true rather than what social pressure tells you should be true. That is how you protect yourself. That is how you eventually buy from a position of real strength instead of quiet desperation. If this opened your eyes, share it with someone about to make this decision without running the real numbers first. Subscribe because every week we cut through what the financial industry does not want you to know. And drop a comment below telling me what city you are in and what prices look like where you live. This conversation is just getting started.